Welcome to the $25 Investor, the channel where we answer one simple but powerful question. Can investing just $25 a week truly change your financial future? Most people believe that building wealth requires a high income, perfect timing, or insider knowledge. But what if the real secret is consistency, patience, and letting time do the heavy lifting? On this channel, we break down real companies, real numbers, and real investing strategies, all starting with just $25 a week. Today, we're focusing on one of the most talked about companies in the world, Tesla. A company that disrupted the auto industry, reshaped energy storage, and pushed innovation at a speed few companies can match. This video is not about getting rich overnight. It is about understanding how small weekly investments, combined with a high-growth company and long-term discipline, can meaningfully help fund your future, whether that future includes retirement, financial freedom, or generational wealth. If you have ever thought that investing was out of reach, this video is for you. Let's break down exactly how $25 a week invested into Tesla could compound into something far bigger than most people expect. Investing $25 a week may not feel powerful at first. In fact, many people dismiss it as insignificant. But investing is not about the size of a single contribution. It is about repetition over time and allowing compounding to work. When you invest $25 every week, you are practicing dollar-cost averaging. This means you buy shares consistently regardless of whether the stock market is up or down. Over time, this strategy reduces emotional decision-making and smooths out volatility. Tesla is a stock known for its ups and downs, but volatility can be a friend to long-term investors who invest weekly. When prices fall, your $25 buys more shares. When prices rise, the shares you already own grow in value. This video assumes a long-term mindset. We are not trading. We are not guessing short-term price movements. We are building ownership in a company over years and decades, one small weekly investment at a time. Tesla is more than just an electric vehicle company. It operates at the intersection of transportation, energy, artificial intelligence, and automation. Tesla designs and manufactures electric vehicles, battery storage systems, and solar energy solutions. It also develops self-driving technology and advanced manufacturing systems that many believe will shape the future of transportation. What makes Tesla important is not just what it sells today, but what it is building for tomorrow. The company continues to invest heavily in innovation, production efficiency, and global expansion. From a long-term investor's perspective, Tesla represents exposure to multiple high-growth industries through a single company. Electric vehicles continue to gain market share globally, energy storage demand is increasing, and automation and artificial intelligence are becoming core economic drivers. Investing in Tesla is not without risk. The stock can be volatile, and growth expectations are high. But for investors willing to stay consistent and think long-term, Tesla has demonstrated the ability to grow faster than many traditional companies. To understand Tesla's performance, it helps to compare it to the broader market, represented by the Standard & Poor's 500 index, often tracked through the SPY exchange-traded fund. Over the past 3 years, the Standard & Poor's 500 index achieved an average growth rate of about 20% per year. Over 5 years, the growth rate was approximately 13.65% per year. Over 10 years, the average annual growth rate was about 15.72%. Tesla's growth over the same periods tells a different story. Over 3 years, Tesla achieved an average annual growth rate of approximately 27.23%. Over 5 years, Tesla's growth slowed to about 4.64% per year. However, over 10 years, Tesla delivered an average annual growth rate of approximately 24.19%. This comparison shows two important lessons. First, Tesla has outperformed the broader market over longer time frames. Second, growth is not linear. There are periods of explosive growth and periods of consolidation. For long-term investors, these cycles matter less than the overall trend and the power of compounding. Disclaimer: this video is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor. The examples and opinions shared in this video are based on personal research and experience. Investing involves risk, including the possible loss of principal. Past performance does not guarantee future results. Always do your own research or consult with a licensed financial professional before making any investment decisions. To understand why Tesla is often discussed as a long-term growth investment, we need to look closely at its historical growth rates. Growth rate shows how fast an investment has increased in value on average each year. Over a specific period of time, over the past 3 years, Tesla achieved an average annual growth rate of approximately 27.23%. This means that, on average, the value of Tesla increased by more than 1/4 each year during that time frame. For long-term investors, this level of growth can significantly amplify returns through compounding. Over the past 5 years, Tesla's average annual growth rate was approximately 4.64%. This slower growth period reflects market volatility, economic uncertainty, and Tesla transitioning from rapid expansion to scaling production and infrastructure. Slower growth periods are normal, even for high-quality companies. Over the past 10 years, Tesla delivered an average annual growth rate of approximately 24.19%. This long-term number is especially important because it smooths out short-term fluctuations and shows how powerful Tesla has been as a wealth-building asset over a full market cycle. The key takeaway here is that long-term performance matters more than short-term noise. Investors who stayed consistent through both fast growth and slow growth periods were rewarded through compounding. Before discussing growth, it is important to understand how much money you actually put in. Many people overestimate how much capital is required to build wealth. If you invest $25 every week, your yearly contribution equals $1,300. Over longer periods, here is how your total invested capital adds up. After 1 year, $1,300. After 5 years, $6,500. After 10 years, $13,000. After 15 years, $19,500. After 20 years, $26,000. After 25 years, $32,500. After 30 years, $39,000. This section is critical because it shows that massive wealth does not require massive upfront capital. The real power comes from time, discipline, and consistency. Now let's connect contributions with growth. If you invest $25 a week into Tesla, your yearly contribution equals $1,300. Over time, as Tesla grows and compounding takes effect, the difference between what you invest and what your investment becomes can be dramatic. After 5 years, you have invested approximately $6,525, and your investment grows to approximately $10,866. At this stage, growth is noticeable, but patience is still required. After 10 years, you have invested approximately $13,025, and your investment grows to approximately $135,121. This is where compounding begins to accelerate. After 15 years, you have invested approximately $19,525, and your investment grows to approximately $842,179. At this point, the growth of your money far outweighs your contributions. After 20 years, you have invested approximately $20,375, and your investment grows to approximately $1,071,529. This is the compounding curve most people never reach because they stop investing too early. The lesson here is clear. Consistency beats intensity. Small weekly investments, when paired with time and growth, can lead to life-changing results. Now let's take the strategy up one level. If you invest $50 a week into Tesla, your yearly contribution becomes $2,600. While this is double the weekly amount of the previous example, the long-term impact is more than just double because compounding works on a larger base. After 5 years, you have invested approximately $13,050, and your investment grows to approximately $21,703. At this stage, the gains are modest, but the foundation is being built. After 10 years, you have invested approximately $26,050, and your investment grows to approximately $270,243. This demonstrates how compounding accelerates once time and consistent investing combine. After 15 years, you have invested approximately $39,050, and your investment grows to approximately $1,684,358. Notice how the investment growth far exceeds the amount contributed. After 20 years, you have invested approximately $40,750, and your investment grows to approximately $2,143,058. At this point, the majority of the value comes from growth, not contributions. The takeaway is simple. Increasing your weekly investment slightly can dramatically change your financial future when combined with patience and discipline. Now let's look at what happens when you invest $100 a week into Tesla. Your yearly contribution becomes $5,200. This level of investing is achievable for many people as income grows, bonuses increase, or expenses are optimized. After 5 years, you have invested approximately $26,100, and your investment grows to approximately $43,466. At this stage, the gains begin to feel meaningful. After 10 years, you have invested approximately $52,100, and your investment grows to approximately $540,487. This is where the exponential nature of compounding becomes clear. After 15 years, you have invested approximately $78,100, and your investment grows to approximately $3,368,716. The growth now dwarfs the capital invested. After 20 years, you have invested approximately $81,500, and your investment grows to approximately $4,286,116. This level of consistency can redefine retirement planning. Finally, in this part, let's explore investing $150 a week into Tesla. Your yearly contribution becomes $7,800. This level of investing often becomes realistic later in a career when income stabilizes. After 5 years, you have invested approximately $39,150, and your investment grows to approximately $65,200. Early on, growth is steady but not explosive. After 10 years, you have invested approximately $78,150, and your investment grows to approximately $810,731. This is where compounding begins to dominate results. After 15 years, you have invested approximately $117,150, and your investment grows to approximately $5,053,074. The gap between contribution and value widens dramatically. After 20 years, you have invested approximately $122,250, and your investment grows to approximately $6,429,174. At this point, time becomes your greatest asset. Now, let's look at a more aggressive but still realistic strategy. If you invest $200 a week into Tesla, your yearly contribution becomes $10,400. This level is often reached as income increases or expenses decrease over time. After 5 years, you have invested approximately $52,200, and your investment grows to approximately $86,933. Early growth is steady, but the real power comes later. After 10 years, you have invested approximately $104,200, and your investment grows to approximately $1,080,975. This is where compounding begins to feel dramatic. After 15 years, you have invested approximately $156,200, and your investment grows to approximately $6,737,433. At this point, growth is doing almost all the work. After 20 years, you have invested approximately $163,000, and your investment grows to approximately $8,572,233. Now, let's increase the weekly investment to $250. Your yearly contribution becomes $13,000. After 5 years, you have invested approximately $65,250, and your investment grows to approximately $108,666. After 10 years, you have invested approximately $130,250, and your investment grows to approximately $1,351,219. After 15 years, you have invested approximately $195,250, and your investment grows to approximately $8,421,791. After 20 years, you have invested approximately $203,750, and your investment grows to approximately $10,715,291. Finally, let's explore investing $300 a week into Tesla. Your yearly contribution becomes $15,600. After 5 years, you have invested approximately $78,300, and your investment grows to approximately $130,400. After 10 years, you have invested approximately $156,300, and your investment grows to approximately $1,621,462. After 15 years, you have invested approximately $234,300, and your investment grows to approximately $10,106,149. After 20 years, you have invested approximately $244,500, and your investment grows to approximately $12,858,349. Conclusion: this is the power of consistency. Investing $25 a week into Tesla can potentially build significant wealth if you stay committed long enough and allow compounding to work. The amount may seem small at first, but time turns small actions into massive results. As your income grows, increasing your weekly investment to $50, $100, $200, $250, or even $300 a week can dramatically change your financial future. In the next video, you will explore exchange-traded funds such as QQQ, SPY, VOO, VIG, VGT, SMH, and many more. You will see side-by-side comparisons and discover which investments can help you build wealth. Even if you start with just $25 a week today, if you enjoyed this video and want to see more content like this, please like and subscribe to the channel so more videos like this can be recommended to you. Thank you for watching the $25 Investor.